Are you ready to break the silence on one of the most talked about topics in the investment world? Nvidia, the tech titan behind groundbreaking innovations, has recently been making headlines for all the wrong reasons.
Intel unveiling its new AI chip.
Tom, it's not just Nvidia. Basically, you look at anything that had been linked to AI here, and they all seem to be under pressure.
Yes, we're diving deep into the roller coaster ride that Nvidia stock has been on. Here's the kicker. Is this just a temporary dip, or are we witnessing the beginning of a major downturn? And more importantly, what does this mean for investors like you? Join us as we reveal why Nvidia stock is crashing and how they are slowly draining in the market. An in-depth look at stocks shaping the future investing in AI has gained prominence in today's market, with businesses leveraging AI technologies and solutions experiencing substantial growth and market momentum. This has rendered them attractive options for investors seeking opportunities with high growth potential. The AI market is poised for significant expansion with a projected compound annual growth rate of 15.83% from 2024 to 2030. By 2030, the market volume is estimated to reach a substantial value of $738.80 billion United States dollars. Notably, the United States is expected to lead in market size, with projections indicating $106.50 billion United States dollars in 2024. One of the key advantages of AI in investing lies in its capacity to analyze vast amounts of data from diverse sources. The global artificial intelligence market exhibited impressive growth, reaching USD 196.63 billion in 2023. Forecasts suggest a robust CAGR of 37.3% from 2023 to 2030, signifying sustained expansion and increasing adoption of AI technologies across various industries. Investors have a unique opportunity to capitalize on the growth potential of companies operating in the AI sector. When dealing with a niche area like AI and AI firms, it's crucial to comprehend everything the company offers and the sectors it serves. AI remains largely uncharted territory. Dividend earnings serve as one of the most effective means for investors to gauge a company's financial standing. Analyze the AI stock company's dividends over recent years, its return on investment, and the consistency of its dividend payouts. The future of AI, as well as the firms involved in it, remains uncertain. While it undoubtedly influences future trends, it also carries significant uncertainty. Investors were drawn to the vision during the dot-com boom before it burst in 2002. Similarly, similar concerns were raised about the internet in the 1990s. Investing in an AI stock can entail higher risk than others, and comprehending the full extent of that risk is crucial. Scrutinizing a company's past performance helps in assessing its growth prospects. Examine their expansion, financial results, price-to-earnings ratio, share price, and noteworthy developments from the past 3 to 5 years. Assessing a company's market positioning and competitive advantage is vital in the ever-evolving landscape of the AI industry. Firms with robust competitive edges, technological prowess, and extensive intellectual property portfolios typically exhibit better prospects for long-term success. Investors should meticulously assess revenue growth, profitability, cash flow, and debt levels to gauge a company's financial robustness and stability. Strategic alliances and collaborations with major players in the technology sector can facilitate market penetration and enhance technological capabilities. Understanding the regulatory landscape concerning data privacy, AI ethics, and antitrust matters is paramount, as regulatory changes can significantly impact AI companies. Companies with a global footprint and scalable products are better positioned to capitalize on the expanding global AI market. Diversification of risks is essential, prompting investors to spread their AI investments across various AI companies or sectors, potentially through leading exchange-traded funds. Investors aiming to traverse the dynamic AI industry landscape must maintain a comprehensive understanding of technological advancements, market trends, and regulatory shifts to make informed investment decisions. Evaluating companies' revenue generation strategies and assessing their competitive advantages, whether through technological innovation, proprietary algorithms, strategic partnerships, or robust customer bases, is paramount. Diversification of AI investments across various companies and sectors can help mitigate risks inherent in the technology sector's volatility. Analyzing financial fundamentals such as revenue growth, profitability, cash flow, and debt levels offers insight into a company's long-term viability. Recognizing the significance of research and development in AI investments is crucial as it drives innovation and market viability. Adopting a long-term perspective is advisable, given the time required for significant returns in the AI sector. Staying abreast of the regulatory environment, particularly concerning data privacy and ethics, is essential for understanding potential impacts on AI companies. Seeking guidance from financial advisors or AI investment professionals well-versed in the technology sector and AI industry can provide valuable insights, particularly for those less familiar with this rapidly evolving field. The allure of investing in AI stocks lies in the potential for explosive growth driven by technological advancements with the potential to revolutionize daily life. Companies leading the charge in AI development are often perceived as trailblazers, presenting lucrative opportunities for investors intrigued by future technology. AI stocks represent firms at the forefront of pioneering AI solutions across various domains such as machine learning, robotics, healthcare diagnostics, and beyond. AI stands poised to reshape business processes and decision-making, akin to the advent of computers or the internet. Thus, investors should focus on the catalyst propelling this transformation and position themselves early to capitalize on its potential. To embark on investing in AI stocks, start by familiarizing yourself with AI technology and its far-reaching impacts across various industries. Conduct thorough research to identify companies with robust AI capabilities and promising growth trajectories. Subsequently, establish a brokerage account with a reputable online broker offering access to a diverse range of stocks, including those within the AI sector. Craft an investment strategy tailored to your risk tolerance and financial objectives, whether your focus leans towards long-term investment or short-term trading. Initiate your investment journey with a modest stake in a selection of AI stocks to gain practical experience, gradually expanding your portfolio as you gain confidence. Optimize risk management by diversifying your investments across multiple AI companies. Continuously monitor your investments, keeping abreast of industry dynamics, company updates, and market shifts. While investing in AI stocks offers considerable growth potential, it also carries inherent risks. Take proactive measures to mitigate these risks by diversifying your portfolio, conducting comprehensive research on companies' business models and technological prowess, and staying attuned to evolving AI industry trends and regulatory frameworks. Assess companies' competitive landscapes and financial robustness while considering their long-term growth prospects. Employ risk management strategies such as setting clear investment goals, implementing stop-loss orders, and seeking professional guidance when necessary. Remain mindful of regulatory complexities and ethical considerations surrounding AI investments. Exercise prudence by investing only what you can afford to lose and maintaining a long-term perspective to weather market fluctuations. By adhering to these steps, you can navigate the complexities of AI stock investing with greater confidence and increase your likelihood of achieving success in this burgeoning sector. Prepare to be stunned as we delve into the unexpected turbulence shaking Nvidia stock, one of the biggest AI stocks, to its core. Nvidia's stock comes crashing. Nvidia stock is up by over 60% year-to-date, and it's tripled in the last year alone. Nvidia stock has declined by over 10% 5 other times over the past year. That's more than once a quarter. And speaking of data, let me present some data on Nvidia stock. You've heard the narrative countless times before. If you invested $10,000 in Nvidia when it went public, your money would have multiplied by 1,000 times, and you'd have $10 million today. That's a 32% compound annual growth rate for 25 years straight, which surpasses the returns of the S&P 500. So outperforming the market must be incredibly simple. You simply purchase some growth stocks and then you hold on to them indefinitely. Nvidia stock has dropped by 10% or more on 31 separate occasions. It plummeted by 20% or more 18 times. It's fallen by 30% or more 11 different times, indicating it had to ascend by 50% or more to reach a new high on all 11 occasions. It's declined by 50% on 5 separate occasions, necessitating a twofold increase on 5 separate occasions merely to break even. And naturally, it plummeted by 80% twice, once during the dot-com bubble and again during the global financial crisis. And it worsens when one examines the duration of the deepest downturns. If you invested in Nvidia during the dot-com bubble, you witnessed the stock decline by 85% over the ensuing year. And 2 years later, you were still down by 80%. Nvidia took over 5 years just to break even, just before the global financial crisis of 2007 and 2008, where Nvidia stock tumbled by over 80% again. This time, instead of rebounding after 5 years, it was still down by approximately 70%. It ultimately took 9 years for Nvidia stock to establish a new high after that. A man purchased his first shares of Nvidia stock in 2016 because at the time he was employed at MIT and they were utilizing their Titan GPUs to expedite real-time calculations on data from radars and telescopes. So since he ended up utilizing Nvidia products for work and gaming at home, he reasoned that it must be a prudent stock to purchase. And guess what ensued? Everyone advised him against buying it for all the same reasons that he still hears today. You just missed the surge, it's at all-time highs awaiting a dip. And when the stock finally dipped, everyone's guidance changed. Even at the nadir of this 2-year downturn, Nvidia stock was twice as costly as when I initially invested, signifying that I could only afford half as many shares. The significant lesson from this was to never allow somebody else to dictate your investments. And truthfully, that's a costly lesson that every decent investor eventually learns for themselves. Let me also give you another insight from this man's story. In mid-2020, Nvidia unveiled their A100 data center GPUs, but the stock price was already hovering near all-time highs once again. However, when Nvidia stock plummeted in 2021, efforts were made not to repeat the same mistake yet again. As Cathie Wood continued to divest from Nvidia stock, he created video after video expressing my disagreement with her actions. Then in the summer of 2022, when Nvidia stock revisited the same price as when they initially announced the A100 GPU, and Cathie Wood was still offloading it, he decided to part ways with ARK Invest and began focusing on covering Nvidia, their partners, and their competitors instead. A few months later, Nvidia unveiled their H100 data center GPUs, and the rest is history. Currently, investors cannot achieve the returns depicted in the top chart if they cannot endure the volatility illustrated in the bottom one. Nvidia stock's price can fluctuate by 5% or more in a single day, just like any other high-tech growth stock. Buckle up, folks, because we're about to uncover some jaw-dropping revelations about this turbulence-affected stock market. The shocking truths behind Nvidia's stock. Nvidia Corporation, an American multinational corporation and tech giant, is headquartered in Santa Clara, California, and operates under Delaware Incorporation. Renowned for its software and fabless business model, Nvidia specializes in crafting and providing a spectrum of cutting-edge products. These include graphics processing units, application programming interfaces tailored for data science and high-performance computing, and system chip units catering to the mobile computing and automotive sectors. Notably, Nvidia stands as a leading provider of both hardware and software solutions in the realm of artificial intelligence. Nvidia's portfolio encompasses a professional line of GPUs optimized for edge-to-cloud computing, extensively utilized in supercomputers and workstations across diverse domains such as architecture, engineering, media, automotive, scientific research, and manufacturing. Conversely, its GeForce GPU series caters to consumer needs, finding applications in video editing, 3D rendering, and PC gaming. Impressively, Nvidia commands a significant market share, with its discrete desktop GPUs holding an impressive 80.2% share as of the second quarter of 2023. The company has made notable strides in the gaming industry, introducing innovative products like the Shield Portable, Shield Tablet, and Shield TV, along with its cloud gaming service, GeForce Now. Beyond GPU design and manufacturing, Nvidia offers the CUDA software platform and API, empowering developers to create massively parallel programs optimized for GPU utilization. This technology finds extensive deployment in supercomputing facilities worldwide. Nvidia's foray into the mobile computing market has seen the production of Tegra mobile processors for smartphones, tablets, and vehicle navigation systems. Notable competitors include AMD, Intel, Qualcomm, and emerging AI accelerator firms like Cerebras and Graphcore. The company also develops AI-powered software for audio and video processing, exemplified by NVIDIA Maxine. While NVIDIA's bid to acquire ARM from SoftBank in 2020 faced regulatory hurdles and ultimately fell through, the company continued its upward trajectory. By 2023, NVIDIA joined the elite club of U.S. companies valued at over $1 trillion. Presently, it ranks as the third most valuable publicly traded U.S. company, boasting a staggering market capitalization of $2.3 trillion as of March 2024, trailing only behind tech behemoths Microsoft and Apple. NVIDIA traces its origins back to April 5, 1993, when it was founded by Jensen Huang, a Taiwanese-American electrical engineer serving as CEO in 2024, Chris Malachowski, an engineer with experience at Sun Microsystems, and Curtis Preem, a former senior staff engineer and graphics chip designer at IBM and Sun Microsystems. The trio conceived the company's inception during a meeting at a Denny's roadside diner in East San Jose. At its inception, the co-founders envisioned accelerated computing, particularly in graphics-based processing, as the optimal trajectory for future computing endeavors. They recognized the potential of graphics processing in addressing computational challenges that traditional methods struggled with. Additionally, they identified the burgeoning video game industry as both computationally demanding and lucrative, providing a strategic avenue for market penetration and substantial R&D funding. With an initial bank balance of $40,000, NVIDIA embarked on its journey. Securing $20 million in venture capital funding from Sequoia Capital and other investors, NVIDIA commenced its operations. Initially lacking a formal name, the company's files were labeled NV for the next version. The necessity of incorporating the business prompted the founders to explore words containing NV, ultimately leading them to NVIDIA, the Latin word for envy. Thus, NVIDIA was christened. The company's inaugural headquarters were situated in Sunnyvale, California. Since NVIDIA is now crashing, let's unveil the hottest AI investments of the moment. Must-own stocks for your portfolio. The best approach to discovering exceptional long-term investments early is to comprehend a company's products, not merely their profits. Significant growth occurs when an existing company possesses the perfect product for a burgeoning new market. Product market fit, for instance, Microsoft has been generating wealth by integrating AI into their existing Azure cloud services, their Windows operating system, and the extensive software ecosystems they've already established atop it. Similarly, NVIDIA is enriching its investors as their existing GPUs and acceleration libraries drive new AI workloads in data centers and on PCs. However, Microsoft and NVIDIA are two of the most renowned companies globally. In this episode, I'll spotlight 3 stocks poised for substantial success thanks to artificial intelligence, yet they're scarcely covered by anyone else. Here are the companies I'll discuss. Broadcom, a colossal company with an extensive array of AI software and hardware solutions. POET, an absolute hidden gem of a company propelling AI data center networking to new heights. And Qualcomm, manufacturing high-performance chips for various edge devices, from laptops and smartphones to VR headsets and self-driving cars. This video's scope spans the cloud, the edge, and the networks bridging them. Broadcom is the second best AI story in the space after NVIDIA. They're involved in crafting custom compute offload ASICs for the hyperscalers, developing their own AI chips, as well as the networking side, which is quite robust. This bridges the gap from the shortfalls in some of their other core businesses, which are cyclical. In the meantime, they just acquired VMware, which is massively accretive. By around 2025, Broadcom, with all the synergies in place, will likely be generating close to $60 per share in earnings per share and boasting high 70s to bump up on 80% gross margin, with $30 billion in free cash flow. It's cheap considering the quality of the business, even with multiple expansions. At a high level, you can think of Broadcom's networking solutions as competitors to Nvidia's Spectrum Ethernet and Quantum InfiniBand switches, except they're aimed at hyperscalers that develop their own AI chips like Google Cloud, Amazon Web Services, and Microsoft Azure, who all prefer to keep those racks on Ethernet, which is the industry standard. Broadcom was acquired back in 2015 by a company called Avago Technologies, which makes radio and microwave components, as well as ASICs for phones up to enterprise networking gear. Avago bought Broadcom for $37 billion, which was the largest merger of semiconductor companies in history. That's why Broadcom's ticker symbol is AVGO. The lasers, waveguides, detectors, filters, and even the circuit boards are still separate components that mostly require manual alignment, wiring, testing, and packaging by humans. Until now, POET invented a special type of waveguide that enables optical components to be placed onto a chip by machines instead of being manually wired together. In electronic chips, the components communicate with each other via high-speed metal traces embedded in the wafer. The POET's waveguide functions similarly to these metal traces, but for light instead of electricity. POET holds the patent on this waveguide technology, preventing other companies from replicating it. This is significant for two reasons. First, it grants them access to high-speed manufacturing processes and economies of scale used by modern semiconductor companies. While other photonics companies are still manually aligning and assembling systems one by one, POET can integrate electronic and photonic components onto the same chip. By placing these metal traces and their special waveguides on one wafer, known as an optical interposer, POET can integrate numerous optics and electronics that would otherwise be separate parts of an AI data center's network. For example, fiber optic transceivers are the connectors that link switches in data centers to transmit and receive data. The optical engine is the component of the transceiver that converts electronic signals used by data center chips into light for fiber optic transmission and vice versa. It constitutes about 50% of a transceiver's total cost. Optical engines are expensive because most of the lasers, lenses, filters, and fibers inside them need manual alignment, wire bonding, and testing to ensure sufficient light transmission while accounting for coupling losses from each component. However, POET can construct an optical engine directly on top of their optical interposer wafer, similar to how TSMC builds Nvidia's chips. This modular approach allows POET to offer scalable solutions that meet varying data center needs. POET WavLight focuses on developing advanced optical engines for various applications, including data centers, LiDAR systems, medical devices, and VR headsets. These modular and scalable optical engines can be tailored to specific requirements, offering flexibility and performance. POET Starlight aims to address the growing demand for high-speed connectivity in emerging technologies such as 5G networks, IoT devices, and autonomous vehicles. By leveraging their expertise in photonics and integrated circuit design, POET aims to revolutionize the way data is transmitted and processed, unlocking new possibilities in communication and computing. With their innovative technology and strategic focus, POET Technologies is well-positioned to capitalize on the growing demand for AI-driven networking solutions, making them a compelling investment opportunity in the AI space. WavLight is their 800G end-to-end transceiver built on top of this technology, which means it can be expanded to 1.6 or even 3.2 terabit speeds. POET can sell this transceiver directly to end users like Google Cloud, Amazon Web Services, Microsoft Azure, Meta platforms, and of course, Nvidia. Finally, POET Starlight is a fully packaged, low-cost light engine designed to power optical transmission between chips. Think of it like Nvidia's NVLink, but using light instead of electricity for all the reasons I mentioned earlier, which is why I said they're taking AI networking to the next level. The optical transceiver market is expected to more than double in size over the next 8 years, which is a compound annual growth rate of almost 11% per year. But the market for 800GB optics specifically is projected to more than 10 times over the next 5 years, which would be a whopping 65% compound annual growth rate. I think that 1.6 terabit optics will follow that same growth path in the future. Additionally, the global data center accelerator market is expected to more than 5 times over that same time frame, which is a compound annual growth rate of 24 times per year. So POET's total addressable market gets massive if even a small fraction of AI processors start using light for chip-to-chip connections instead of copper. Between their patented waveguide technology, the integrated photonics products they're building on top of it, and the markets they're breaking into, POET is a real hidden gem that we haven't seen anyone else cover in depth. That said, their market cap is only about $50 million today, and they're not yet profitable, which means the stock is sensitive to interest rates, and they might keep diluting shareholders as they need to raise more capital. So far, we've covered AI data centers and networking. Let's talk about edge computing next. EDAI, sometimes called on-device AI, is about to take off big time. At a high level, EDI is where our laptops and our phones get powerful enough to run AI models on the spot instead of needing to send the work to servers in the cloud and then wait for the results to come back. That means AI at the edge runs way faster, it's way more secure, and it can work without the internet. For example, the latest Samsung Galaxy S24 Ultra has awesome AI features like Circle to Search, which is where you can circle something on your screen to either search or reverse image search it, or their live translate feature, which can automatically detect the language of both speakers and convert speech to text and back to speech between them, or their AI-enhanced camera, which combines optical and digital zooms for up to a whopping 100 times zoom. Well, the Samsung Galaxy S24 Ultra is powered by Qualcomm's Snapdragon 8 Gen 3 processor. And it's not just smartphones. The Meta Quest 3 is powered by Qualcomm's 8th generation Snapdragon XR chips, which focus on using AI to enhance graphics, advance eye tracking, and gesture recognition to create more immersive and realistic mixed reality experiences. Even that hot new AI pin is powered by Snapdragon chips. So unfortunately, this thing is bad at almost everything it does, basically all the time. Where do I even start? Okay, that might have been a bad example. Even the Ray-Ban Meta smart glasses use Qualcomm Snapdragon AR chips to enable real-time photo, audio, and video processing, as well as streaming inside this tiny form factor. Qualcomm stock has been on a significant upward trend lately, rising by over 40% in the last 6 months. Here's an interesting fact. Broadcom attempted to acquire Qualcomm back in 2017 for $130 billion, or $70 per share. This would have been a lucrative acquisition, considering that Qualcomm is now worth over 2 times more than that. However, in early 2018, then-President Trump signed an order to halt the deal, citing concerns that it might undermine the U.S.'s leadership in mobile technology. This highlights how crucial Qualcomm is in the edge computing space. Speaking of acquisitions, Qualcomm acquired a company called Nvidia back in 2021. Nvidia's co-founders hold over 100 patents combined, and all 3 of them were lead architects on Apple's custom ARM-based chips. Today, they serve as VPs of engineering at Qualcomm. Qualcomm's Snapdragon X Elite chip is based on Nvidia's design and is currently one of the best performing chips on the market. It boasts significantly lower power consumption, using anywhere from 50 to 80% or less power than its competitors' chips from Apple or Intel. Qualcomm's next earnings call is less than 2 weeks away, so I'm waiting for their latest numbers to inform my decision on adding to my position. At the end of last year, Qualcomm and Broadcom were the second and third largest chip designers by revenue, trailing only behind Nvidia, which has been gaining market share from everyone over the past year. This is why I decided to make this video, despite its length. I wanted to provide a comprehensive overview since data centers, networking, and edge computing are all poised for significant growth in the era of generative AI. There are plenty of great companies to cover beyond Nvidia and Microsoft, and in my opinion, understanding the science behind the stocks is key to identifying long-term winners in these rapidly expanding markets. Before we part ways, here's a question to ponder. In the face of adversity, do we retreat or seize the opportunity? Join the conversation in the comments below and let us know your thoughts. Don't forget to like, share with other investors, and subscribe for more insightful videos.